Here to discuss Wolfe Research, Chris Queso. Chris, are you surprised at the somewhat muted response in the market to what were kind of unprecedented numbers?
Well, the expectations were very, very high going in. And frankly, what most people were worried about coming into this report was after last quarter's very exceptional results and very high expectations, would they be able to meet it again? I think they certainly met those expectations. And with what they said last night with regard to capacity growth and sustainability of revenue, I think it gives a very good indication to continue to be long the stock.
Yeah. Your price target now is $630. How do you get there?
So we're seeing a path to about $20 in EPS. Our numbers for next year are a little bit more conservative than that, but clearly on the run rates they're on now, with the assumption of that they do sequential growth in their data center segment for at least the next several quarters, that gives you a clear path to $20. And that puts the stock in kind of a mid-20s multiple or so, which is not unreasonable for a stock that has had pretty close to a 35% revenue CAGR now for about 7 years. And again, with AI, that looks likely to grow. On the same point, what I think is exceptional about Nvidia is that despite you don't find companies that are growing this fast and also generating a lot of cash. So next year, we expect them to generate $40 billion worth of cash flow, which gives the stock about a 3.5% cash flow yield, which is still pretty exceptional for a growth stock.
Let's bring in Mizuho's Vijay Rakesh into the discussion. And Vijay, I know you've raised your price target on the stock from $530 to $590 a share. Talk to us about the China opportunity. Clearly, CEO Jensen Huang sees opportunity there, and you're seeing demand increase. But do you think this also gets the attention of some China hawks this morning? You could argue that this company is helping advance China's advances in artificial intelligence with its less powerful chips.
Yeah, thanks for having me on, Seema. I think when we look at the China opportunity for Nvidia, obviously that is a market for them. There are hyperscalers there, but I think they will abide by what the U.S. restrictions are, and we have seen them kind of look to kind of tune their GPUs or data center process to kind of adhere to the U.S. restrictions. So as long as they do that, I think they are fine. I mean, but you're right. I mean, there's probably an AI industry there that's growing very fast, and there are multiple applications there that can be pushed. But as there are restrictions there, I think we believe Nvidia is probably following those. And so, but in general, I would say the AI market continues to grow globally. By far the biggest bang for the buck is in the U.S. with CSPs, hyperscalers, and cloud, and moving out to enterprise. So.
Chris, what do you think? Is the opportunity in the U.S. so large that even if the U.S. does implement further export controls on China, that it just doesn't matter, or does it? Of course, coming ahead of Commerce Secretary Armando's trip next week to the country.
Right. Well, the company did address that in the earnings call last night. And what they said was there's so much demand in the market right now, and there's supply constraint, that even if additional sanctions were put in place so they couldn't ship to China, it wouldn't have a material impact on results right now because demand is so far ahead of supply. Longer term, this is just about the global, and not even just the demand for AI, but it's about the re-architecting of data centers to include acceleration. Of course, AI is by far the largest application for that. What the company talks about is there's $1 trillion worth of data center servers out there right now. And the company feels like every application will be accelerated at some point, and you need NVIDIA's chips to affect that acceleration. So, regardless of what happens in China, there is a very large runway.